decide, all this. And with respect to inflation, he talked about, the base effects, reaching its cap now. We did, now let's look at the scenario. If the CPI, for me, should increase by a worst case scenario, the maximum it has ever increased over the last 20 years, so over the last 12 years, except what we had in mid-2015, the inflation rate will drop by not less than 1%. So I believe the base effect is still dominant. Fine, I said prices have been quite, steepy, and it has, offset the base effects. But for me, I think we're going to see it surface, and that's because of the hike we had in electricity tariff. That has been the highest increase in CPI over the last 12 years. So barring that, the next highest, if you simulate that, you're going to have no less than 1%. So I believe we're still going to see inflation, moderate. And fine, prices are still on the increase, but it's about perception. Oh, like this drop in inflation, it's about the perception people also, read to it. Basically.
So whatever happens, Robert, let's come to you. Whatever happens, the committee is very reluctant to contemplate, using the words of the governor, further rate tightening, which will widen income gap in Nigeria, and folks on the street are not going to like that.
Yeah, true. I think I agree with most of the points that Kemi raised, and I mean, our perspective is a little radical, in terms of looking at, she was talking about the pass-through of policy rate to the market rate. Nobody buys MPR. So whether MPR goes to 14% or 15% is not what determines, the perception of individuals who are investing within the economy, about the different angles. She mentioned a couple of, market rates, apart from savings rate that is benchmarked to the MPR, the lending rate, one of the factors that will determine whether banks will lend will also be the risk perception, their risk management framework, internally. Over the past couple of months, we've seen the pressure on non-performing loans. In the last communique, it was noted by one of the members that non-performing loan is reading about 13.7%. That's a pressure point. So even if my prudential guidelines allows me to do 100% loan to deposit, I don't want to grow deposit. More so that the investment environment suggests that there are high yields, within the economy. So I think the committee, the CBN actually noted the fact that whether they decide to ease or to tighten, in any case, the effect is net-net. If you look at money supply on an annual basis, I was looking at it as at March, money supply was, the narrow money was about 10.1% up. Despite the tightening, So despite this, the fact that MPR has remained at 14%. So it means that whether or not, and we've seen frequency of OMO auctions, in the market, which are guiding at a very significantly higher rate than what the MPR is indicating. So at the end of the day, what would determine whether people or investors would play in the market will be what their risk perception is about an economy and what the return on their investment will be, at the end of the day.
Fabina, do you think the central bank is reaching a point of a trilemma here, whether to cut, to hold, or to raise? Which one do you think is the softer and the easier one to hold? Too hot to hold, too cold to drop down? Do you think this is becoming a trilemma for Godwin Emefiele and the rest of his team as to, okay, let's just hold for the sake of holding it, or because we should just let it go, but we can't let go, but we can't hold it tighter, so we just hold it somehow and just keep holding it?
The big takeaway from this meeting for me is the MPC is still very much concerned with inflation. And it's sort of like signal that if the need be, tightening might be a next move. That's the signal I got from this meeting. And it is clear when the central bank highlighted the fact that a ramp up in budgetary releases and fiscal spending could exert a lot more liquidity and induced inflationary pressure combined with the cost-driven inflation that we're already facing. So it tells me that inflation is a big problem for them, and they will not hesitate to act if they see inflation turn the other way. But I would like to agree with Kemi when she mentioned that we are yet to still feel to the full extent the base effect. I agree with her. I think in May we'll see a much steeper drop in inflation that we've seen in the last couple of years. So hopefully that should deter the central bank from considering another rate hike.
Robert, do you think when Godwin Emefiele says, the FX interventions will be vigorous and will be consistent, do you think Godwin Emefiele is protecting his currency market and his FX interventions here with everything he said today?
That's always been paramount, in the mind of the governor and of course the CBN as a whole. We've had a couple of conversations around this, and our own stance has always been that the market can function efficiently, if the CBN is not so fixated on what the rate is. The governor mentioned something that we prefer is a southward, because I had to write it down, a southward convergence of rates than an upward convergence.
And northward. But the journalists were also concerned about FX rate anyway.
But the point is that it means that the respite we are seeing now and the improvement we're seeing in the foreign exchange market can only last to the extent that, and the committee noted the fact that shale production, is a concern. So by the time we start seeing any other southward trend in oil prices, or we see any major shock from production side, it means that this whole thing can change, and that is where it speaks to investor confidence, which we've been trying to rebuild, over the past few months. So it is important that the committee and the CBN, because it's one thing for the committee to advise. The committee had advised in the last May meeting that the CBN should move towards a flexible foreign exchange market, and this is what we have. What we have now is flexible foreign exchange market.
From the FX
we
market,
have 6
from
different
March
rates,
meeting.
Within the system. And one of the journalists asked the question, which of the rates are you looking at? Is it the 305 or the 360 or the I&E window rate, which is trending at about 380? I think it is fundamental that the CBN should, try. What if the regime we manage is a managed floating? Whenever the fundamentals change, we should allow rates to move. That is economists. Whatever we try to do to manage the rates may be unorthodox.
Let's wrap. Let's begin to wind down, Kemi, because all of this will flow into the market as we speak, and tomorrow morning we're going to be in business. How do you think the markets, the various financial assets, should begin to react to this? Do nothing, however, protecting the FX market and contemplating a further tightening if need be.
Okay. There is a consensus on the table. There was a consensus, before the announcement that they should hold rates. So I believe that the market also had that view that they should hold rates. So an extent that has been, priced in. And another thing, earnings is a key driver, of the equities market. So if the earnings, we're going to go into another earnings season. So if the earnings are quite good, so we believe that the trend or the trajectory we're seeing in the market, should persist. And if you look at the market valuation, P at about 12.75, it's still lower than emerging markets, 15 times lower than frontier economy, about 16 times P. So we would believe that and also the various factors that have contributed to this move we've seen in the markets, are still very much, persistent. So we think that will happen for the fixed income space. We think that'll be maybe an anticipation of, we were anticipating that they're going to cut rates later down the year, but the language is kind of changing. But I think we still hold on to that. Now for the fixed income, we think people will still do kind of a yield pick up at the short end of the curve. Treasury bills is about 20%, bond is about 16.9%. So we think they're quite attractive, and if you hold that view that they're going to reduce rate, they might also want to lengthen the duration of your fixed income portfolio.
Robert, thank you very much. That will be your parting words. Robert, what's your parting word as far as the markets going down the line is concerned?
Well, we think that the market already expected, like you said, what the decision has been now. And we also have a view that the CBN is guiding all stakeholders to noting that there's a shift. MPR is one of the policy tools, for controlling aggregate money supply. It seems that the CBN has shifted, from looking at the MPR. They are more, in terms of looking at what the OMO as a monetary policy tool. So, and I think if there will be any upward or downward review of rates, they will guide in the rate at which they are ready to mop up liquidity, within the system. So we've taken a view that it seems like MPR is becoming redundant as we speak.
Pabina, I'm sorry to cut in there. Our time constraint. Pabina, what's your take down the line? We have about 8 months or there about 7 months to end the year. Do you think if there's a likelihood of a rate cut or a rate hike, will anything happen between now and then as far as the markets? Where do you think investors should be looking into?
I think, if anything, this particular meeting, the outcome of this meeting pretty much douses hopes of a rate cut. Just like Kemi, I had expected a rate cut sometime down the year, but I think this meeting, the signal that I'm reading off the MPC is that it is very concerned with inflation. What it means is that interest rates may need to stay higher for longer. So I think my base assumption will just be we don't see a rate cut this year, so we would expect that fixed income yields will still look attractive going forward.
Thank you very much, all of you. I need to thank you all for being here. Pamina, thank you very much from Vetiva Capital Management Director, Institutional Sales. Robert Omotude, thank you very much for coming through as well, Head of Investment Research at AfriInvest, and of course, Kemi Akinde, who is the Head of Research and Strategy at Meristem Securities. We thank all our viewers here in Nigeria and around the world for watching a special edition, the session Tuesday by the Central Bank of Nigeria. We'll see you again. News comes first here on Channels Television, and that's news across Nigeria at the top of the hour. I am Bosun Omofaye, and I'll see you again.